And a lot of the talk around that reform agenda is about the listing rules. So what are those changes and how is that going to help with the UK's competitiveness with companies?
The second bucket is about making life easier for companies once they're listed. And the best example of that is the removal in the proposed rules for the requirement for a shareholder vote for large acquisitions. So under the current rules, if a listed company wants to buy another company, another business that is worth more than 25% of itself, by reference to various tests, it can only do that with the vote of its shareholders. Now, that all sounds fine as a matter of good governance and shareholder rights and so on, but in the real world, in particular in a competitive auction scenario, a UK listed business is with the need for a shareholder approval is going to be uncompetitive against private equity bidders, companies listed elsewhere in the world.
So much of this discussion is vis-a-vis the US. And for sure, under the current rules, it is easier for US listed companies to consummate some of the transactions Jamie was talking about, and for founders to maintain a level of control, a high level of control post-IPO, which is a lot of the focus.
That's a really good example of where, as a slight shift of philosophy away from governance and shareholder protections and into a regime that allows our companies to deliver growth.
It's a very welcome change, and we're hopeful that it will make a difference.